In this video, I'm going to show you everything you need to know about your monthly mortgage payment and give you a tool, a free calculator to help you be able to shop for homes and understand what the mortgage payment is. Often one of the hardest things to do when you're looking to shop for a home is understand the actual true cost of owning monthly. So I'll give you that link that you can download. But first, let's talk about your monthly mortgage payments. Okay, so this is how much you actually need to pay to the mortgage company every month if you do take out a loan on a home. And it's not just straightforward. It's not just one number all the time. So your monthly mortgage payment is made up of several different things combined, and then the lender normally says, okay, you owe this one number here. So the first thing is principal. So principal pays down the loan. So let's say you take out a loan for $300,000. The principal, every time you pay principal each month, lowers that. So from $300,000 to $299,000 and some $100. Okay, so it's lowering your principal with each month. On your mortgage payment, you can choose to pay extra principal if you want to pay down the loan even sooner. So maybe you took out a 30-year loan, you can actually pay extra principal each month with your lender to shorten that down if you want to, and you'll also pay less interest on it. So your principal, you also have interest, and the interest is charged to you based on the loan, the outstanding loan balance. So not the initial loan balance, it's what the current loan balance is. And this is as an annual number. Okay, so for instance, if we have a 3% rate, that's 3% annually that you pay on that loan. So if it's a $100,000 loan, you're paying $3,000 in interest every year that the balance is $100,000. So in the first year, we have that balance. So you're going to be paying about $3,000 that first year. And then the next year, your balance is actually lower because you've been paying down principal. And so you'll be paying interest on the new balance, and that's going to re-amortize. Okay, so basically what's happening is you pay less and less interest each month and less and more principal each month. Okay, and I'll show you a chart here in just a minute to explain those. So with our interest, something interesting here is there's going to be a difference whether it's fixed or it's adjustable, okay? And this is going to depend on the type of loan that you get. If you get a fixed 30-year or a fixed 15 or whatever, a fixed rate loan, your interest rate stays the same, and so does your monthly payment. The interest won't change because your interest rate doesn't change. However, if you get an adjustable rate mortgage, there could be changes depending on the type of adjustable rate mortgage that you get. So you want to be careful in understanding this. This principal and interest, if you have a fixed rate loan, should stay fixed. So if I know what the number is now, if it's $1,000 in principal and interest now, and it's a fixed rate loan, it's going to always stay $1,000 a month over the next 30 years or however long my loan is. But if it's adjustable, then it could actually change depending on the type of loan that I get. Then you also have mortgage insurance, and this is going to change depending on the type of loan that you have. With conventional loans, this normally will drop off once you have 20% equity in the home. If you have an FHA loan, a USDA loan, then mortgage insurance stays on for the life of the loan unless there's some special considerations that we won't get into depth here. But mortgage insurance basically protects the lender. It's an extra insurance if you don't pay back the loan. That's what that's there for. So it doesn't protect you as much as that would be nice. Then escrow. Now, escrow is interesting because it's actually optional depending on how you set up your loan. Normally, to waive an escrow account, you need about 20% down with most lenders. But escrow basically takes these lump sum payments and converts them into monthly payments for you. So for instance, taxes. In Ohio, taxes are semi-annual payments. All right, so they're paid 2 times per year. All right, so let's say that the lender didn't collect taxes for you. All of a sudden in July, you have a tax bill and it's $2,000. And you're like, oh my gosh, I didn't save $2,000 for taxes, but I have this $2,000 bill. And so escrow was created so lenders will actually help you save this money. And the way that they do it is they'll basically say, okay, if your taxes are $1,200 a year, pay us $100 per month. We'll set it aside in a separate savings account for you. And then when that bill comes, we'll pay it out of that account for you. All right. And again, if you have less than 20% down, a lot of lenders will force the escrow account. They'll make it a requirement. So it's something to be mindful of, and that's going to be up to you. But this escrow account sometimes is on loans and sometimes isn't on loans. So taxes is often in escrow. Same thing with homeowners insurance. Homeowners insurance is usually paid annually. So instead of having this surprise bill of insurance come up, what happens is a lender will say, we'll just take that number divided by 12, keep that money in a separate savings account for you, and then when the bill comes, we'll pay it out of that savings account. And so often lenders will take all of these numbers and put it all together in one bottom line. So they might say you owe $2,000 per month, and that includes everything in here. Now let's take a look at this chart to just kind of see how things change, right? If we're talking about fixed, most people are working with a fixed loan now. Adjustable rate mortgages used to be a little bit more popular, kind of pre-housing crash, but they just kind of fell out of favor a little bit because there is fluctuation with the payment here. So again, if we have a fixed rate loan, your payment should be the same every single month for the life of the loan until you pay it off. The only thing that will change in your monthly payment, and this isn't up to the lender, is if your homeowner's insurance changes or taxes change, right? Often what happens is sometimes people come to me and be like, my mortgage payment changed. I thought it was going to be this, and why did it increase? Maybe a couple years after they bought their home, and it's because taxes increased, right? The lender doesn't control your taxes. It's your county and your state. So that might change, and often taxes don't tend to go down, unfortunately. So taxes may change and increase your payment, and there's nothing that you can do about it. You just have to pay more into taxes. You owe the home and you're paying taxes on that. Homeowner's insurance, if your insurance cost goes up, then so will your mortgage payment if you're including that in your escrow accounts. And it could go down. Maybe you get some savings on your insurance and that lowers your monthly insurance payment. But we can see here in this chart, in the green we have principal, in the yellow we have interest. And so it's interesting in this, this first year we can kind of see the spread. There's so much more interest being paid than principal, and that's super common. Okay. Over time, what will happen is you see this kind of curve. We pay less and less interest and more principal. However, the payment stays the exact same. So see how this is flat across the board? The payments are going to be the exact same, but what will change is what is being allocated. How much of it goes to interest, how much of it goes to principal. And then there's some kind of additional costs in here that we do need to consider. One would be homeowners association. So this may be super small or non-existent for you, or it might be really expensive depending on where you're living. So homeowners association, I've seen this anywhere from like $25 to even like $400 a month. It just depends on kind of where you're at. Utilities. Utilities is a huge consideration as well, because a lot of people just look at the one mortgage number. They just see, okay, what's my monthly payment? But don't forget, you also have utility costs that you need to consider when you're shopping for a home, because there's a little bit of this lifestyle creep that can happen, right? So maybe someone's saying, I pay $1,500 a month in rent, and so I'm looking at homes, and maybe I'm like, oh yeah, I can do the $1,750 for a mortgage. That's fine. But as that creeps up, we also have to remember that utilities are there too, that we do have to keep in mind. And some of those utilities that we were paying, maybe some of those were included in your prior rent. And so you might not have, you might not be thinking of the total cost of utilities. So something you really want to keep in mind in here, especially if you're purchasing like an older house that may require, maybe it's not insulated as well. So air conditioning and heating is going to be really expensive for you. That could be something you want to watch out for. And then also the main, why do I keep going to eraser? The maintenance cost savings as well. Often it's suggested that you would save a percentage of your purchase price each year in your savings account, or maybe a separate account, to be able to afford maintenance costs as they come up and have this kind of buffer in case there are emergency costs or repair costs or whatever that come up. Because remember, if you're not renting anymore, you don't have somebody taking care of this stuff for you. So if the furnace goes out, there's nobody to call. It's you. And so you likely want to have some savings built up in there. You don't want to just have this emergency come up and then you have to go use a credit card or something for that. Okay, so some calculators that I'm going to show you. First, I would just be careful of the payments that are shown on sites like Zillow or Realtor.com or whatever, because often they're giving you the best case scenario considerations. They're like 20% down, conventional loan, super low rate, all that kind of stuff. And so it's easy to go look at a home and see like, oh, that's an easy payment. I can afford that, and go write an offer without considering what the actual monthly payment is. A great one is usmortgagecalculator.org. I really like that one. And then also, I have a Google Sheet that I'm about to show you. I have it in the description. You can go ahead and download that for free. And it's going to help you compare the monthly payment and considerations for different houses when you're home shopping. So let's go ahead and take a look at that now. Okay, so here is the monthly payment calculator. All you have to do is text my number, 937-358-6542. Just text hashtag payment to it and it will send you the link. So what you want to do is, here's the instructions. So you want to go to File, Make a Copy. And what I have in here is an option to put in your loan details that you know. Maybe you could just want to take a guess right now, or maybe you've been pre-approved and you know some of this right now. And then I have options where you can put in the house address, right? So you can come in here and just do like 123 Main Street or whatever. Put in the home details, and what will end up happening is you can compare the monthly payment of each of these. And so we'll talk through what this looks like. So let's start with house one. I'm going to pull up Zillow and show you again how to do this, because a big problem that people have is they're looking for homes and then they're like, well, what's the actual monthly payment? How do I compare these side by side? So we're just going to pull up random homes. I'm not going to put in tons of details here. So what I'm going to do is, if I was shopping for homes and I was like, here's some homes I want to compare, I'm going to paste in the address here. Why is it, there we go. I'm going to paste in the address just so I can reference it later. Then I'll go ahead and find our price, $244,900. So I'll put that as our price, $244,900. And let's first actually put in our loan details. So maybe I'm doing 5% down. Let's say my interest rate's 3%. Mortgage insurance, you can talk to your loan officer about this. This is going to be pretty common for maybe somewhere around a conventional loan is 0.6%. FHA is 0.85, USDA is 0.35, VA is 0. 0.6 we're going to go with as a conventional loan. Homeowners insurance rate, this could depend on your area, right? Florida is going to have much higher homeowners insurance than Ohio would. So this is going to be pretty common for my area, and we're going to do a 30-year loan. If you're doing 15, just 15 right there. So we're going to do 30. And on the sheet, you're only changing numbers in blue. So we have our price, then square footage. All right, so 1890. Now, the reason we have square footage in here is I'm going to help you kind of auto-calculate utilities just as a rough estimate so you can get an idea. So 1890 monthly HOA. Let's see what this is. On Zillow, what we can do is actually scroll down, and we're going to find monthly cost, HOA fees. It looks like there are none listed. So it looks like this won't have an HOA. And HOAs are not very common around my area. Annual taxes. So let's scroll up here. Property taxes, $41.91 for 2019, $41.91. And then this is utility cost per square foot. This is 14 cents per square foot for utilities. And this might be different for your area or different for a different house. This is just to get a ballpark range. You're welcome to come in here and increase what that cost is or decrease it if you want to. But I think this is going to be a solid number for us to work with. Then we also have the maintenance savings. So this is how much of the home price, what percentage are we kind of keeping away in a separate savings account that we want to save monthly for this home. So 1%. Right, so on a $300,000 house, okay, this is $250,000. So on a $250,000 house, we're saving $2,500 a year. Is that going to be enough for you? And maybe you want to increase it to 2% or 3%, whatever works for you. So let's say 2% as maybe a better number for us. So it will auto-calculate our principal and interest. We talked about that. Taxes, mortgage insurance, homeowners insurance, HOA. So $1,600 a month. This is what the lender would actually kind of bill us each month. In this scenario. However, there's also the other costs that we need to consider. And this is where a lot of a lot of people can kind of get messed up when they're looking at buying a home because they only see the $1,600, but we can't forget about the other costs associated with this home, right? So we have the utility cost, and this is based off of that 14 cents a square foot, right? If I wanted to, I could raise this to 20, and we can see that number jumps up. So this is going to be a ballpark range for us in utilities. And the bigger the home, the more that utility cost is going to be, which is why we have the square footage in here, right? If this is a 3,000 square foot house, that utility cost, oops, I put 300. That utility cost jumps up as well, okay? Then here's our monthly maintenance savings. So we're saying we would save $400 every month in a maintenance cost. And again, you can change it. So we can drop this down to 1 if we want to lower that, all right? So we're gonna stay around 2 just to be conservative right? So on here, 244,900, we'd be saying we're saving about $5,000 a year. Okay. So that actually gives us a total of the monthly payment plus the other costs that we need to consider in utilities and savings of $2,272 per month. Well, that's vastly different than $1,600. And so you can see there was that $673 a month in these costs that maybe we didn't consider. So it's a little bit scary to just see the $1,600 is what the mortgage company is charging us or collecting for us, including escrows. But there's the other total cost of that home as well. Okay, so let's compare this to another home that would be somewhat similar. So this is 3 beds, 2 baths in Centerville. Let's say we're comparing it to, let's compare it to this one. This is probably, let's see how similar this is going to be. Probably very similar for us. So 294,900. So we'll do the same thing. 294,900. We're going to, this is 2225 West Lawn Drive. Okay, square footage is 2378. Okay, monthly HOA. Let's scroll down here. No HOA. Just for the sake of the example, let's just put in, I don't know, $100 a month. Just for the example. Annual taxes, 4368. 4368. We're going to keep utility costs the same. We'll do savings of 200. And so now we can take a look at the differences here, right? We had 2 properties. One's about $50,000 more than the other. And so what does that actually do to our monthly figure? $1,600 to $1,970 that the mortgage company would require, and $824 in these kind of other costs. And so the difference here is actually from $2,272 to $2,794 with these as well. Okay. So I'm not going to do a house 3, but what I would consider in here is what you can also do is use this to compare offers, right? So keep these numbers the same and take a look at, okay, well, what if we offered 310 on this home? What would that do to your monthly payment? So same house, put that right there. So going up by about $15,000 in our offer would increase the cost by just a little over $100 per month as our bottom line. So maybe that's something that you want to consider or use in here. You're welcome to kind of use this calculator however suits you. So again, if you want this, just text my number 937-358-6542. Just text #payment in there to get this. Feel free to use it, and I hope this helps you out.